Hey traders, Marcello here, founder of the Day Trading Academy. Wanted to do a quick video recapping today's activity ahead of the Brexit, and more importantly, how to talk a little bit about how to be able to identify the high probability ways to trade and how to avoid mental mistakes and mistakes that we make trading. So today was one of those days, beautiful day for us at the Day Trading Academy. There isn't too many days where we're not able to make a profit, because obviously the key when it comes to day trading, guys, is to make consistent profits every day, not necessarily make $1 million, right? Because if you make the right decision, you'll start making $20, $50, $100 a day, and eventually that'll turn into $2,000, $5,000, $10,000 a day. So one of the things I wanted to share as well was my trade from this morning, some of the errors that I made as well in terms of expectations, holding a bias, right, and not paying attention to exactly what we're seeing, which with the experience I have with about 14 years in the markets, I was able to go ahead and correct that very quickly to be able to go ahead and take a very good trade. First thing I want to show you here is the gap. Generally with gaps, the market will generally, you can see here, this was the close of yesterday and this was the open, and I'll go ahead and do a longer line here right about there. Generally with gaps, the market will come back and touch, so to speak, the gap that we have. So you can see that we had a pretty significant gap. The market's been very bullish the last few days. If the UK decides to stay in the EU, I expect to see a bit of a surge in the indices around the world as well. But you can see that we had pretty good run to the upside. I mean, we're talking, beautiful run here to the upside. So I was expecting in the beginning of the day that the market was going to continue going a little bit higher, right? Because obviously we had that strength. So I'm waiting for the right situation to be able to go ahead and put in my order long, and you can see that the market didn't continue going higher until here. So I was technically correct in what the expectation was going to be, but I was a little off in timing. Now, in the market, there's always going to be micro trends within bigger trends, right? So if I kind of squeeze this chart here, you can see that the bigger trend overall is that the market's going up, right? You can see that this is just a retracement for the overall move up, right? But in reality, when we trade intraday and we day trade in the market, that is, we get in and out, all positions are closed at the end of the day. We have to be able to trade within the micro trends, but also keep in mind that macro trend, right? It's like saying we have to pay attention to the economy of New York City, even though New York is inside of the massive United States, right? The macro kind of idea is the United States, whereas the micro is New York. So, we'll invest in New York even though, let's say, the U.S. isn't doing well, because obviously the economy of New York can be doing very well, right? So we had a huge run to the upside, and one of the things I want to be able to talk to you a little bit about is the simple fact that most of us think that we need a million screens, we need a million indicators to be able to day trade. All of us are kind of looking for that holy grail kind of strategy or indicator that's going to help us to trade. And at the end of the day, guys, I hate to break it to you, but there is no holy grail. The only holy grail that we're going to be able to have is paying attention to what you guys see on the chart right now, which is the price. This is something that no one can take away from you, right? Indicators are always lagging. That means that they always calculate the information in the past. And what do they calculate the information on? Price action. So we should skip the indicators and pay attention instead to the actual price action. And I'm gonna give you guys a little bit of an exercise here to be able to start to frame your mind in the right manner to be able to identify these certain situations. So let's take a look at what's happening here, right? So we have a situation where the market comes up, right? And then we have what we call a little bit of a J pattern. Some of you guys might call this divergence, a variation of divergence. Then we get a little bit of a continuation to an extension, I should say, to the bottom. Okay. Then we have another deeper retracement, right? And it doesn't match perfectly, but I'm gonna draw a situation here where you guys can see the the same situations happening over and over and over again. So this second square is the deeper retracement, and then after we get the deeper retracement, we get the extension, right? And I'm going to try to kind of line these up at the same time. Then after that, we have another situation where what we call is a J pattern. This was actually developed, or at least pointed out to us by one of our newer traders that we had a while ago, one of our student traders. And then we have the deeper retracement, right? And then we have, again, the extension, right? And then the pullback. And one thing I forgot to mention on here was the fact that the market is giving us shallower retracements and respecting our areas after the market continues lower, right? And it looks something like this, where it continues. We get, again, the J pattern, and then the market gives us deeper retracement, and then we get the extension, okay? So lining this up, right? This is what this looks like. This is the deeper, right? This is the deeper. This is the deeper. In this scenario, this is the deeper. And in comparison, we have those J patterns as well, which did occur here. I didn't draw it, which is here, right? Then we have it here, which is here. And then the market continues, and again, we have it here, which is here. So if we're going to be looking to take positions, not to say that we can't take all of these, because a lot of these were valid trades for us using our progressive trading strategy, but we want to be able to pick the ones, or at least make sure that the ones we take are going to be the ones where we can make the most profit, right? It's all about risk versus reward. So thinking in terms of areas, now if I draw some areas on here for you guys, kind of frame this market for you, if you guys give me 1 second. That's not what I wanted to draw, so give me 1 second here, guys, to kind of frame this correctly for you, right? We have this bad boy here. And then we also have this bad boy here. There we go. Right, so it looks something like this. Let me go ahead and adjust that, right? And now you can see that we have a little bit of a frame, a little bit of a framework in the market. Let me just adjust this 1 second. There it is. So you can see that we have a little bit of a framework there, right? You can see the market, the areas that the market's respecting, and the areas that the market's respecting on the bottom side as well as the upside as well. So, right, so I wanted to take these trades, right? You can see the nice continuations there to the downside, but unfortunately I didn't have the capacity to be able, let's not say capacity. Let's say I had a bias to the upside. It was a common error, right? For those of you guys that use NinjaTrader, you can see this is live. I was using 10 contracts, but you can see that the one I wanted to take was right here. Right? And I didn't take it because I still had that bias to the downside. It's not to say that professional traders don't make mistakes, because we definitely do. And today, you know, with the 14 years of experience I have, you know, I was able to sit back and say, no, wait a second, there's something else going on here, draw these patterns, see the structure, and then from there be able to capitalize on the movement. And in terms of risk versus reward, for the strategy that we use, just to kind of give you guys a bit of a framework here, you can see that this was the bit of an area here, something along those lines. My risk is minimal, you know, minimal. It should not go above this area. We're talking about 3 ticks, which is what, $37.50. And with the contract load, it'd be $375. And then from there, you can see that we wanted to find the continuation to the downside, this is really where I wanted to have my exit. So we're looking at a 3-tick stop, which is roughly $375, to a 4-point gain, which is roughly $2,000. And that's literally, you know, what's the numbers on that, guys? Let me whip out my my calculator here, because I'm a calculator baby. It's 2,000 divided by 375. It's 5.3 to 1. So those are pretty good odds. I didn't hold it all the way to there because I didn't like the behavior that I saw on this run to the downside. Again, this is the same reason why I was still expecting the market to give us that continuation higher, which eventually it did, right? You can see the market did go to the upside, but I still was able to net about $1,750. That's $1,750 on the trade, with identifying the structure and just kind of continuing the behavior. Once we get that continuation to the downside, we already got the shallow retracement. So here is when we should get the deeper retracement and then the continuation, right? And notice how it didn't happen. So this is where the behavior changes. And if we look at a macro perspective, okay, a macro perspective, you can see that this matches this right here. Okay, and if we correlate that with the structure that we see today, you can see how we got the same pattern, the same behavior, so to speak, we got the shallower retracements, which are, let's say, here. And then from there, you can see that we got the deeper retracement, which is what we've seen in all these squares that I have drawn here in the middle. So we should see the extension to the downside. Unfortunately, we didn't get the extension to the downside, and that was this quote-unquote confirmation after the first indication that we were heading to the upside. And then after that, obviously, if I squeeze this chart, you can see that the market right now is absolutely flying to the upside. There's a beautiful situation sitting up here on the daily chart. I talked about this on the Spanish video I just did a moment ago. You can see the same pattern behavior, the same recognition. We can use that. Notice how these three squares, the 3-4 peaks, and you can see what the potential of this is. Obviously, you know, I want to give you guys a disclosure right now in the video, right? This isn't something to tell you guys how to trade. You guys are responsible for your own money, but obviously the potentials are definitely there. Hope you guys like this video. I'll put this this trade up here one more time for you guys so you guys can see that. For those of you guys that use NinjaTrader, which I recommend you guys use, you can see the right here with the chart trader that we were trading live. Let us know if you guys have any questions. You know, leave a comment here on YouTube. We'll definitely get to that for you guys, and don't forget to subscribe. So we'll talk to you soon, guys.